messages. Please also send messages with the hashtag Business Express 981 on Twitter, and we're streaming live on YouTube.
Thank you so much, sir. Thank you, Ugo Dre. Welcome to you again. All right, so I want to get your thoughts on this first story. This is from SPM Intelligence. It was picked up by Reuters. Shipping goods into Nigeria costs more than for African peers. They have a graphic where they're comparing. They were looking at shipping goods into three different ports. One, of course, in our dear beloved Apapa, the other one in Durban in South Africa, and then in Tema in Ghana over the course of 3 months ago. And I think the last disparity was in the transportation costs. What are your thoughts now? This is something we've continued to talk about with regards to charges of, you know, ports, items going into ports, and the prices just continue to rise. And now they are essentially saying that we're dwarfing our African peers with regards to costs.
Yeah, not just shipping cost. I mean, we've always talked about ease of doing business in Nigeria and how government regulations basically stifle businesses, right? And our competitive edge. So interesting report. Shipping charges in Apapa $374 compared to 321 in Tema and 247 in Durban. Durban, that's South Africa. In general, it cost about 2,886 dollars. Yeah, and that's combining shipping, terminal, and local transport, compared to 636 in Durban and 890 in Tema. So that's why you see that a lot of goods continue to be smuggled in Nigeria because it's just too expensive to to go through our ports. And then, I mean, every day you see the customs saying they've declared 1 trillion or whatever in revenue, but these things have attendant cost impact on the economy, and especially Nigeria's competitive edge. It's just so difficult to import things in this country. Equally difficult to export things. I mean, basic things that shouldn't even be a challenge, and a Nigerian factory just comes in and basically just destroys everything. So the interesting report. I think Nairametrics also had coverage on that. Today.
What about what this means for agreements like the African Continental Free Trade Agreement and other such agreements and bilaterals where we're supposed to be opening up trading with other nations? Isn't this, as we're looking at how this having an impact on it, possibly?
Very good question. I mean, there should be positive impact, meaning that part of the what you expect to see in the free trade agreement is that duties and port charges should sort of like even out across the African region. So that means that that helps facilitate trade. So it's easy for importers or exporters to predict or to plan ahead, or to manage our cost more effectively, and compete very well. So it shouldn't cost that much difference from clearing goods in Ghana or in Nigeria or where else. So yeah, that's what we expect to see. But I mean, I don't think we need to wait till the AFC FTA for us to start all these things. I think that and it's a huge part of Rotos. I spoke to somebody at the Ease of Doing Business about a year ago or 2 ago, and they were very, very bitter and about how difficult it has been to get the customs to even agree on or to ease some of their policies. It's been very, very difficult. Even the vice president is finding difficult to even bear on them to change, and that's because everybody just has their own targets. And like I said, government seems like they're in competition with the private sector. I always say that all the time. So it's always like they're also competing for the same revenues that we're all competing for. So the same way that you're trying to get people to buy your products and services, they're also getting people to pay taxes. So, and it's all around the same pocket. So but then, while government needs tax revenue, they also need to ease business, because it is when there's ease of business that you can have a lot more money circulate around the country, and then you can still achieve what you want, which is grow your tax revenue. But so far so good. It's been very poor. A lot of people have basically stopped export business because of all these issues. Yeah, it's just unpredictable. And these are even official charges. If they had included the other underground ones that you have to pay, all the people you have to bribe and all the way and all that. And plus, apart from even when you even cross that gate, all the way the Omoniles or the area boys you have to settle, the police. Anyway, I don't want to do it.
No, Benga Kamu says Rotus and Ugo, is there anything new about all these issues that we don't know already? Why do people bring goods through Benin Republic, Togo, etc.? Everything is deliberately made difficult in this country. Chika says, good morning, Rotus and Ugo. If it's to compare, VAT rates will quickly come up. See shipping costs now, the government will be mute. Why is it that customs in Nigeria is managed as a rent-seeking organization? These are the issues. We aren't serious yet. All right. Thank you for that, Chika and Benga. All right. So we'll go over to oil. Nigeria's reports suggest, in fact, not even reports, we're quoting our finance minister here, that Nigeria is considering a budget review. Minister of Finance review the budget benchmark. In fact, maybe possibly the entire budget because of this. Is it too late, or they should wait some more, or should they have done
Well,
this earlier?
I think I think the timing is fine. Now, whether it's too late, or too early, it's difficult to tell now. But I think that the timing is right. The coronavirus is still hasn't yet been declared a global pandemic. But when that happens, or if that happens, and that's a huge issue, because basically affects every single facet of life for everyone across the world, and that's why the WHO is being very careful about it. No gainsaying that this coronavirus has affected supply chains around the world, and I think that even as a country we'll start to feel the effect very soon, in next quarter or so. A lot of the things that we rely on heavily in Nigeria, you won't get, because a lot of the things that we do here we rely on China, even if it's locally assembled plants or goods and services or whatever. You still rely on China for some kind of input. So a lot of people are complaining already that a lot of their their inputs are getting stuck in China because of the coronavirus. Even though things are getting a bit better in China compared to other parts of the world, but it's affecting supply chain. But everybody's watching it carefully. So the shipping industry is getting a heat. Air transport is getting a heat. So it's going to affect supply chains, and that's why you're also seeing oil prices go down, because as well people are cutting back on production massively. So if you cut back on production massively, then there's demand for oil also reduce, and that's how oil prices are going down. I think that if there's going to be a revision, what they will want to look at is the long-term outlook for coronavirus. Is it something that will continue to spread and continue to affect global trade, or is it something that would maybe ease off, maybe through weather? Some people are saying that, look, maybe the tropical weather might change it, or as we start to approach the summer busy. Which one comes first?
I think
Spring.
spring. Spring.
Yeah, that maybe perhaps it might. The fun thing with this world is that nature has a way of just containing things.
Right.
You know what I mean? Yeah. So all our mess ups, nature just comes and just saves us. Like so maybe that could just sort of slow things down. But if it doesn't, then look, we're in for a very tough 2020. I mean, whoever knew that 2020 was going to be shaken by virus? I mean, like, not even wars, not even all those early Iran bombing of the Iran general. In fact, the virus has basically taken out the Iranian leadership.
Iran is a mess right now on the back of the the sanctions from US over that nuclear deal. Okay, Yinka says, as at the time of the budget preparation, price of oil was around $65 to $70 a barrel. So what gives the federal government confidence to peg the budget benchmark at $50+? It still baffles me. I think $35 to $45 would have been safe for us. Now they are considering a review, and I'm in doubt if they understand what to do, because to be fair, majority of policymakers, they don't have sense in this country. You're so harsh. Okay, Ugo Dre, I think it's a question for you. Moyo is asking, there should be some savings from the subsidy accounts. Would that not provide a cushion? So I think on the flip side, what is it now? Landing costs with oil prices.
Yes, there should be. I mean, you'd expect that, but I think that the government makes more when oil prices, it's up compared to what they're compared to when it falls, or what they're saying when it falls. The irony is that China now is
they buy less from us.
No, China is now stopping people from getting into their country.
Oh, they're not bringing as in for people coming into China.
Yeah, because they've basically contained coronavirus. So now, the tables have turned. So they're saying, look, don't get into our country. Please stay where you
No.
are.
That will hit Nigerian
We've been
traders.
able to, like contain this. So please
Yeah.
don't bring it
Don't
back.
bring
You
it
know, deal with it in your country. Deal with it. We've gone through our own course. It's run through our own course.
Right.
So just deal with it in your country. I mean, that's like
But that's not
ironic.
news for traders, though.
Ironic. It's all ironic.
Emmanuel says the right channel, because of the power which they have over the importers, it boils down to information from government to importers, and also the right to litigation if extorted, which should come from the judiciary arm of government. That's from Emmanuel here. Is this Argilo or another Jumoke? Jumoke says they need to review the budget as it's not only affecting the price, but it also affect production as OPEC Plus is shooting more production costs. Aha, that's true. In fact, they're meeting today. Thank you for that, Jumoke. They're meeting today and tomorrow in Vienna. So there was this whole talk. They wanted to initially cut about 600,000 barrels per day. Then it's now saying it might be 1 million. Russia didn't want to cut. What? I mean, it's guesswork here. But what do you think is going to come out of this their OPEC meeting, or is it OPEC plus their non-members today and tomorrow?
Well, whatever decision they take will depend on how they view the impact of the coronavirus, across the globe. I think these guys have cut so much already, and you've cut, and then it's beginning to affect your own revenue again, and you wonder, like, look, it's cutting actually making giving the right kind of impact that you expect, and I guess that's where the worry is, because they don't really see that cutting oil production is giving them the right kind of stability they want for oil prices. It's not really stimulating demand as much as they want, because unlike before, where when OPEC or OPEC plus cuts, and then the US is not pumping, but now that they're cutting the supply from other parts of the world, that is still keeping oil prices down. But we got very worried, man. Yeah, you see, as if you're trying to be modest, so it doesn't happen all the time. So I mean, like, you expect this kind of I mean, stocks were falling, but yesterday the Dow Jones was hitting levels that they haven't seen before. So and even the Nigerian Stock Exchange also, you've also seen stocks that have picked up 2 days back to back now of gains. So I think that we will get through this. We will get through this. Okay. By the way, there was demutualization yesterday.
Yes, we talked about it. Which is how do you feel about that, the exchange? Finally, publicly
traded.
Yeah,
it's good. At least a lot more transparency. So
corporate governance and all that.
We'll see all the stuff.
Okay, wait. Oil is just dominating everything. If we cut, do you think Nigeria? I think they might give us leeway to.
You're not producing what you say you produce. What's there to cut? There's natural cutting. You're cutting naturally. If you're supposed to be doing 2.5 million barrels per day, you're doing 1.8, 1.9.
Well, you're cut already.
There's nothing to cut again.
Nigeria not be exempted. Okay, wait. All right. See, okay, this is another one though. They're saying from Bloomberg, millions of barrels of unsold West African oil are piling up. Said oil traders are struggling to sell West African crude because, again, the virus has slashed demand from China and other parts. So they're saying that about 70% of April loading cargoes from Angola and Nigeria are yet to find buyers, and that's overlapping with. So that's, I guess, it's a forward-thinking thing where they're already loading up cargoes for the next month. So they're saying because demand has been cut for oil, these cargoes are now inventory is piling
but
up,
that's because there's no demand. So if there's no demand, then it means that people who had already booked, for supplies are saying, look, why don't you just look down? Because there are no off-takers on my own side. That's because production has basically slowed. Factories are shutting down. People are getting a bit more careful. Inventories are piling up. So nobody wants to. Everybody's basically trying to limit, their own cost. You know what I mean? So, and that's why you're seeing that, cargoes are piling up. And it's going to be like that for a while till people, get a hang of what exactly is what's happening.
Now, wow. All right, Benga Kamu says, speaking of governments being in competition with the private sector, didn't an arm of the NNPC introduce oil lubricants in the market last week? Did you hear about that? I didn't hear about that. So, well, Benga, thanks for that gist. I have to look it up. It says, and okay, Bugo, this is another angle again. It says, Benga says, and we've been defending the naira with foreign reserves. The economy is in for a big bashing. What about that side? As oil prices continue to fall, pressure.
That's why I said I don't want it to. I mean, you should be worried if you're saying it's going to drop below $40, because once that happens, then that's the exchange rate you're looking at there, because it's going to be difficult for the CBN to support to continue supporting naira at those levels.
Mm.
The good thing though, the positive thing is that the rate cuts that happened in the US few years ago could have positive impact on Nigerian economy because what that means is that interest rate in Nigeria is extremely low. And if you notice, a lot of Nigerians in diaspora are actually bringing money into the country now
Here,
because
right.
there's really nothing to do with that money in the US. I mean, like if you invest in US treasuries or you're getting like next to 0%. In
Right,
fact,
right.
negative. I was talking to a friend and he said like the returns there's negative now because
Mm.
even if you put that money and you invest in, they still tax you on top. So you're getting negative returns. So the
Right.
only thing you can do is just push that money in stock. So that's why you see a lot of people, their stock market is booming because there's a lot of money going in there.
Right.
But then you can't just put all your eggs in one basket and you still have that Nigerian affinity. So a lot of them are coming back to Nigeria and buying real estate and then looking for what to do. So um, maybe there's a bit of positives this thing.
Yeah.
Just all you need to do is follow the money and then see where it takes you.
Follow the money. Read up nairametrics.com. Hey, Ugo Dre, thank you so much for joining us today and giving us your insights. It was all oil today. We'll see what the impact is on the OPEC meeting. We'll be following it today and tomorrow, and we'll. Okay, no, tomorrow is Tech Friday. Anyway, but we'll still keep watching. Ugo, thank you so much for joining us. Thank you everybody for your messages. Benga, Yinka, everybody else. We will see you tomorrow. Business Express, Smooth 98.1. Take it easy.
Business trends beyond the headlines.
Thank you.